Hello. So, first and foremost, I hope everyone is having a good day. It is July 2nd, Thursday, 2:31 p.m. And this video is pretty much going to be I guess you could say it's like a weekly case study, though it's not Friday yet. But I'm still laying out the foundation for what price has done for the entirety of its current week up until Thursday. So I'll be talking about the price range from June 28th all the way up to July 2nd, which is this current day. We just had FOMC just a little while ago. If you were to go to, Forex Factory or any other outlet that you use for news, it can be off of Top Step because they do have news drivers on there, or it can be off of Bloomberg or whatever it is that you guys are using, MyFX Book, etc., etc. So we had those releases come out at 8:30. I did trade both deliveries. Traded the 8:30 delivery. At first, it was an initial buy model into a level, and then I traded after 10 as well, catching the shorts for the displacement to the downside. And I'm here to pretty much just talk about all of that within a whole. So I'm doing it off of Top Steps, platform Project X. I like the way it looks. Charts are really clean. But all of these things are just going to be diametrically opposed to what I did on my live account. So there's really no reason for me to go log in on NinjaTrader and do the same thing here. So I'll use this as the foundation. So I have the price action pretty much, well, the markup's pretty much blurred out just so you could take a look at the data of how the market looks now. And then adding the markup to the chart, it does nothing but just, give the chart lipstick. So it makes a lot more sense. Breaking this down to the 1 hour. And then from there, all of these things are pretty much identified and marked up from off of the 1 minute. But if you've been paying attention to how I trade now, then you understand that price is fractal. No time frame is necessarily better than the other. The importance of, the higher time frame is to depict a bias, find that direction. And the reason why I always use the M1 and things of that time frame, things of that sort, those time frames that are on the lower time frame, or it's really for entries. So me, I'm a M1. I like to get down to the very fractal of a candle, 30 seconds, a minute, 5 minutes, whatever it might be. And if the range looks clear on that time frame, then that's what I need to see for an entry. So this is pretty simple. Um, Same concept that applies every single time I trade. Nothing has changed. Now we've just shifted over these delineators to a entirely new trading range. So the range that we were focusing on last week, Sunday through Friday, you could take the PA from that range and tie it into this range, and you might see certain levels react off of certain levels from this current range from the past. So the range before this, since we have Sunday the 28th all the way up till Friday the 3rd, the previous range before this would of course be the 21st up until the 26th. So if you wanted to tie the 21st range and the 26th range and study that Sunday through Monday delivery, delineating midnight opening price, dragging those highest highs and those lowest lows in between those ranges to the right, then you will start to see that we've been previously tapping into these levels before. And sometimes those levels might have, first presented touches to where we've never been in that area before, but once the market traveled into that area today, that's what caused a certain reaction to happen. So it's just the ingenuity behind price. It's an algorithm behind it. It moves a certain way once it trades into certain levels. We all know that. And once price trades into those levels, that's where you can expect reactions to happen into that range that you're, or that direction that you're looking for price to trade into. So first and foremost, very first thing I would do when, of course, looking at the chart, yes, I already have like the markup and the entry model and things of that sort, but that's not really what I want you guys to be paying attention to. I want you guys to be paying attention to how I was able to depict the bias for the day, for Thursday. What made me execute a long, what made me execute a sell when the time was probable for it, right? That's what we all want to figure out. So the very first thing that I would do to determine that is I would want to look at price from a higher time frame and determine, where is it that we're more likely to trade? Where does the direction make more sense to head into? So when I delineate these individual ranges, it's just one or two things I want to see. Are we trading lower or are we trading higher? And I get that depiction by looking at what we've done throughout the week. So on Sunday, we ended up opening here. This ended up creating the low of the week on Sunday. Monday after midnight, price did what? Rallied 9:30, typically where you always see the bigger moves of the market. The range is being created 9:30, 10 o'clock. Both of those candles really go hand in hand together, because 9:30 is not only the opening of the stock exchange market, but then you have 10 o'clock as well being a very powerful candlestick within itself that is also in confluence with multiple time frames. And that strength that 10 o'clock candle has is because of the fact that it is a new 4-hour opening PO3. Same thing with a 30-minute, 15-minute, hour, 1 minute. There are so many time frames that blend and mesh with that 10 o'clock candle. So depending on which way that 10 o'clock candle opens, pushes, and then of course flips away from, that can help you determine a direction on the bias. So on Monday, we end up making the low of the week. And I'm just going to do this for one chart. Low of the week at 29,273.75. From there, the market continued to rally up after making that 10 o'clock PO3. And then on Tuesday, now if I was to take Asia, because I do like studying Asia, that is the true day, dragging that level out of where price made its bottom, making it red. And this, if you want to, you could title this Asia session low and or low of the day. And this is for Tuesday. And we're going to drag that level all the way out to the right here. So the low for Tuesday was clearly made in Asia, and at 9 o'clock all we got was just a lower low, hesitation to get underneath this low, and price kept rallying up. And what time of day? 9:30. So the only reason why you can't tell that this is that 9:30 pressure is because I'm looking at it off of the hour, but we know that 9:30 is in confluence with the 9 o'clock candlestick on this time frame. So always expect a 9 o'clock candle to have juicy movement in it because of the 9:30 opening of the stock exchange. We end up forming the high of the week up here. Make this level black. Make sure the camera not in the way so you can see everything. High of the week at 30,599.75. And the market has never came to this level for the current week. So price below is pretty much bearish. Very simple concept to understand. As long as we remain underneath 35,99.75, we are clearly bearish from the weekly standpoint. So price decided to make the high of the week on Tuesday. On Wednesday, price continued to go lower. And then on Friday, what could you assume that we did as well? We went lower. So Monday, well, factoring in Sunday's PA, but Monday, Sunday, we rallied. Tuesday, we rallied. And on the same day, rallying on Tuesday, we formed a reversal towards the end of the day, opened back up in Asia, formed a lower high, and then the market continued to expand lower. So we had Monday, Tuesday bullish. In Tuesday's continued bullish leg of PA, we end up having a reversal on Tuesday, leading into Wednesday we sell off, and then Thursday we sell off as well. So that's pretty much the delivery when it came to this day. Now I just start adding all my little candy to the chart. This is the reason why I draw these zones out and things of that sort like that, just to delineate time, delineate the sessions, figure out where the highs and lows are at in the marketplace, and then, where we more logically, about to go, logically able to go based off of what price is showing us that it's willing to do. I try not to marry a direction on the marketplace and just stay true to what it's actually doing, because in marrying a bias you could really cook yourself and not seeing what it wants to do. And the market can really necessarily do anything. Sometimes you can be wrong, sometimes you can be right. So Tuesday's low. Same thing with Asia. Notice how we made the low in Asia for Wednesday. We traded off of that level. Every single lower low that was made going into Wednesday's session was toppled, going lower. So 930 came up, pushed all the way down here, trading back into this range. And then we end up forming a bottom here. And that's that 930 manipulation. Came down, poked, trade right into this range here. It's 1 hour order block. Price reacted out of here. We came back up. Fair value gap. And then price shoots its way right on back down and continues making lower lows until we end up making the low for July 1st, which is Thursday. So right here at 1600, that was pretty much the low for Wednesday, or the last known low on the day for Wednesday. I'm gonna drag that out. So low of the day, and this is Wednesday. Coordinates for that low, coordinates for Tuesday's low as well. So right now you can see how there's this repeated chain of reaction here with lows. Notice the market has been gravitating underneath lows, though we do have highs within the marketplace that's also getting toppled as well. But notice the pattern that you keep seeing here. So target draw liquidity for today was clearly bearish. We seek the low of the day that was made within London session. That target was 29.826.25, and everything after that is just wherever the higher time frame is pushing. You go look on the daily. Where does the daily look like it's trying to go? That is how I'm able to get my levels and figure out where it is that I need to be in line with in terms of directional bias. So target draw SSL 29.826.25, and this would pretty much be what was the current low for Thursday, but that's been broken, and now the low for Thursday has truly been made at 1300 GMT, which is pretty much 145. So I'm sorry, that'd be an hour from now, but it would be the 1 o'clock range. That's where we made the lowest low. So at 1 p.m. we end up making the data low for Thursday, which is currently still the data low at this point in time, 2:45 p.m. when you guys actually watch this video, we might actually trade back through this level again, either sometime in Asia or sometime by the end of this market's close, if it doesn't retrace and pull back for the end of the session. It's typically just how candlesticks work, expand all throughout the day. Then around that 3 to 5 window, the market ends up doing its last known retracement and then closes on the day for that candlestick. So scratching that out, not really necessarily worried about Wednesday and what Wednesday did, just primarily focusing on what price has done on the current day. So what do we do on Thursday? Notice how, none of the highs have been rated into. Market has just kept falling until we got into this particular level here. The high of the day that was made on Thursday, this was that Asia session high. So Asia session high. This is Thursday high. And then the coordinates for this PA is 30,239.50. And now for this level, I can make it pink, something that we need to study in terms of reaction here. And this is pretty much the all-time data high for Thursday. So I would just make this current data high. And the current data high is 320 flat. So now you can start to see how all my lipstick is just coming to life. You notice how we have the sweep. So when I see sweeps, I'm more so focused on the draw up. How many points did the market rally? So looking at the sweep, it was about an 80-point sweep. So the market rallied up 80 points above this high in 2 ticks. Though that's how many points it rallied up into that high, you still have to factor in what the market was doing from before 9:30 and then after on, because the market has to expand into this pink level here in order to get to that place, right? So if we have to expand up into that level, that means that we can trade into that level. So looking at the market's price at 9:30 and just dropping down, I'm on the M1, of course, and all I'm doing is just going back to the time of day of when we had our PA at 9:30. So you already see me pretty much, take my entry and things of that sort and post it on, social media. So I don't really have to necessarily go over like why I got in or what my entry model was. What I will do though is save this layout, and I'm going to make a copy of this layout so I can remove any of my edits and don't have to touch them when I come back. So just call this clean chart 2.0, and I'll make a copy. This is clean chart 2.0, and now I can start just removing these markings and just focusing solely on 9:30, because I want you guys to be able to see how you can trade up into these levels at your time of day. So boom, delineating this entirety of this range would be the 9 o'clock candle. Probably be a whole lot better to do this off of TradingView. So Thursday, remove all these lines here. And then I just want to see the 9 o'clock candlestick. So for the moment, I'll do it off the 5M. This is the 9 o'clock candlestick. The very next thing that I want is, of course, the open of the candle. So bearish candles, of course, open from the top, expand lower, close at the bottom. So this right here is just the candle's 9 a.m. That's what I'll title it, 9 a.m. fractal. This is the way that I teach people to trade PO3s. So this is the 9 a.m. fractal. Price expanded going lower in 9:30. What do we see price do at 9:30? So 30 minutes into the 9 o'clock candle, price ends up opening for real this time at 9:30 and creating lower end of the range here. So I'm just notating off these fractals. Notice how these levels become important because they end up being the low of the day, the low of a 1 hour, PO3, the low of a 4-hour PO3, the low of a weekly PO3, things of that sort. That is the importance of these levels and why they hold up so strongly when you look for price to trade either into or away from these levels. So the 37.25 level was clearly the low of this range, and then that data high is all the way back here. That short unfulfilling of reaching into that data high, of course, the levels are going to be slightly different because this is on TradingView and not on Top Step. But it failed to pretty much claim that high. 9 a.m. fractal, we go lower. We create that bottom here at 37.25 and we trade away back above the 9 a.m. fractal. So price is bullish above this fractal's opening. And the opening for this fractal is 75.50, right? So price above 75.50 is pretty bullish. So I'll make this blue because that's what that represents at this point in time. Price was going up, right? So this 9:30 candle FMP, this was pretty much the move I traded going up into forming this high up here, but I pretty much got in and got out within this same candle. Not honestly worried about that, but we end up making that high. Cool. Now when the market actually opened up, put this in between here, dotted line, market trades lower initially, then expands and comes back up, creates the short-term high, creates a higher low, and then hesitates to grab underneath this low. When you see that, of course that is some sign of unwillingness to maybe go lower. It's probably had its feel of what it wanted to take from going lower initially. And this hesitation here at 9:38, even though we had very strong displacement going down, unfortunately that displacement going down got overtaken by longs or buyers within the marketplace, completely filling in that void and creating something as an inversion here for us to pretty much attack on the buy side. So keep in mind that if this is the 9 a.m. fractal, that means that everything that price is doing directly opposed to being underneath the fractal leads to opportunity to how the candle would expand on the higher end of that fractal. So if I was to take the chart replay and rewind this all the way back to pretty much just being within the 9 o'clock range, and if I was to put a delineator for 10 o'clock here, this would pretty much, in your eyes, you want to interpret this as the end of the 9 o'clock's range. So you're studying that in between this window of 9 o'clock and 10, and this is what price is doing within that window of 9 o'clock leading up until 10 o'clock's next opening and exposure into the marketplace. So if I was to put my favorite little tool that I'm always using, which is the PO3 indicator, and if I was to use this PO3 indicator, right, and place this on the hourly, you will see exactly what I mean by fractals and how you're able to pretty much trade fractals without the use of any indicators. The only thing you need to look at is the time that is literally on the chart. So notice the 9 o'clock candle that I delineated, the 9 a.m. fractal, that line is literally in the same correlation with the opening. The high, which is 3025.75. You probably just can't see it because my OHLCs are pretty small. The open, the low, again, everything is dead on. Don't even need the use of this. 37. Price is currently gyrating at 30,110.25, and we are above that 9:30 open at 30,75.50. And then just let it play out. See how that 1 hour 9 a.m. candle is flipping. We're bullish above. You're seeing that pressure, that unwillingness to go lower, all within this candle's displaced PA here on the M1. So you can look at it on the 5 minute and things of that sort. You know, if you're not an M1 trader, you can't really understand fractals on the M1 and you need higher time frames. Everything that you're doing on the lower is going to be the same thing on the higher, so it doesn't even matter. You're just looking at more of the buildup of the candle on the higher time frame. You're still going to end up trading in that direction. You're still going to need to make sure that you have a proper entry. The reason, again, that I like using the lower time frame for entry and holding that lower time frame entry and looking at it from the higher is because it allows me to use a lot less risk than most participants, because you know, the higher the time frame, the higher the stop loss. If you want to reduce that stop loss risk, then you need to, of course, enter in from a lower time frame. Of course, that makes, you know, some type of logical sense with Confluence. You want to see breaks and retests, you know, IFAGs, order blocks, whatever it is that you're doing to determine your order flow confirmations. That is what you want to use on the M1. Nothing changes, just the time frame that you're entering off of. So price continues to expand. Now that 9 o'clock candle has flipped bullish, your entry into that bullishness was right here in this IFVG on the M1. Broke the 9 a.m. high, and it's trading bullishly going up. So if this 9 o'clock candle was to remain bullish, then of course the next logical areas that you would want to see price trade into is any resting levels of buy stops, and that's only if it continues going up. So let's see what it does. So resting buy stops. $30,294.50, and then let the rest of this play out. So yeah, 1 hour candle has pretty much remained bullish, and now we're going into the 10 a.m. opening. Same thing applied with the indicator. It already takes that 10 a.m. opening and drags it across from us, draws it out here on this side for us. I'm just labeling it. If none of this was here, this is how you would have to do it manually. So this is the 10 a.m. fractal on the M1. It has opened, it's formed its low, it's going higher, it's getting in sync with the previous PA that we were playing in, and that 10 a.m. candle is expanding higher, and it's trying to reach for those resting levels of buy stops that are sitting here. So here it shows that price made its high at 30,293, and resting buy stops is at 30,294. So all it would need is just one fluctuating point and 2 ticks to pretty much get into this level here. So 1 point and 2 ticks. So it hesitates, it does not take it, and it just dumps off. So we failed to clear this resting level of buy stops. We failed to get above this short-term high, and this right here is pretty much something that you would notice to be a failure swing. And notice where we have that failure swing after we've pretty much cleared this short-term high here, resting within that 9 a.m. candle fractal. So it has nothing to do here with it, this being a 10 a.m. candlestick. That's not the importance of that candle. So we sweep. A level of stops has been hunted. And now our old participants in the marketplace seem to now become our new targets. So the low that was resting within that 1 minute IFEG now becomes a target on the lower end if price chooses to flip here and no longer respect a bullish market structure, which we're seeing that here because the 10 a.m. candle is now starting to spool downwards. So it takes the low, the 10 a.m. low. 10 a.m. candle continues to expand, comes back up, shoots back down, and you're seeing how the entirety of that range of the 10 a.m. candle started from back here, showcasing you the entry model after the sweep, and then continuing to retrace and come further up, correcting, and then coming further down, just continuously breaking underneath its low on the current day. So a lot of people, I guess, don't really necessarily understand what that means. But when a candle creates its range and it has to continue to expand, it has to retrace away from that data low or that low of the day or that 1 hour low or that 4 hour low it's created, to entice willingness to get in. So when we have our market participants and the market rallies against you, that doesn't necessarily mean that the trade ideal is wrong. All it necessarily means is that you're probably getting into the marketplace at the wrong point of time. And you want to see a correction being formed and, of course, a short-term low being made as well, because now that leads to you having a target. Now we just need to see the market correct itself and then, follow up with a break in market structure, a return back into the order block, things of that sort, for you to be able to take it back down into that exit of where you want to get out of the dealing range, pretty much. So comes right here to this 1 minute orb. And this is at 3223.75. And then from there, price pretty much traded lower. Seek the level of stops underneath the 10 a.m. low, and then kept expanding down, attacking the 10 a.m. low. And then 1022 gets under there, attacks the low, expands, and trades right into that 37.25 level. And this level here was pretty much that 9:30 a.m. low. The low of the current dealing range that we've pretty much expanded away from. So price is always creating dealing ranges, but this is pretty much the dealing range that we've been sitting within. So price expanded from this low and went higher and was trading back and forth in between the low of this range here, where we made our first initial pull from, and then the high of this range here, where we pretty much failed to take out the resting buy stops above that 3294.50 level. So it failed to trade up a point and 2 ticks into that high, which is cool. A lot of times it does not need to get past the high. Sometimes it will fall just below it and still trade off. So just showing you how the M1 structure builds up the higher time frames, PL3s, and this is how I pretty much trade the higher time frames, PL3s, off the M1. It just leads for the best entries for me. So as it continued to break down and expand going lower, creating these nice little bottoms, and then prices continue to break and head lower. We're now back below the 930 opening, which means price is bearish. Look for trades below, and it's doing that. Same thing with the whole concept behind midnight opening price. If I was to go back here and identify that midnight opening, the same way ICT does, the midnight candle. And then if I was to go ahead and just extend this candle to the right, and this candle here will make purple and brighten it. But if price is pretty much, underneath the purple line, it's bearish below. If it's above it, then it's bullish above. The same concept applies. This would be the higher end of the range up here, which is, the data high up here. and we've made the higher end of this stick, which means if I was to go to daily chart, this would be the same data high. Nothing would change, even if I'm on the M1. Price is back below the purple line, which means we're below midnight opening price, which means that the candle's range should be bearish. All PA, everything will be in line with bearishness. You look for bearish ideas and confluences to take the market lower. That is just one of the things that, that helps with what helping you understand is determining the direction. So now that pretty much broken down the fractal, we pretty much get out of that now, and this will start to make sense on what it is that you're seeing. So that failure to trade higher, to get above those buy stops again, that was pretty much resting up here. It failed to get up there. Here it looks literally identical on top step, so that's why I was saying like the levels are slightly off when you're looking at it off of TradingView. So this high came priced in at 293.50, and this high came priced in at 293.50. So they are relative equal highs, while on TradingView it is a failure swing by a point and 2 ticks. So take note of that that slight difference. So on Top Steps platform, they're relative equal highs. On TradingView, looking at the CME data for E-mini NQ or micro NQ, it's not relative equal highs. It's the complete opposite, only by a point and 2 ticks. So it made the relative equal highs. This is pretty much that 9 a.m. We're above it. Price flipped, sweeped, failure to go higher. 10 a.m. pretty much exposes bearishness after that. How do you know? Because 10 a.m. bearish below. So since we're below this price of 32.5750, that's all I need to know that that candle is pretty much bearish, and I'm seeing the underlying workings of how that candle is flipping here. Once we made that initial draw up and then broke underneath this low, then I know that that 10 a.m. candle is pretty much expanding like this. And every time we break a low, that means that the 10 a.m. candle is expanding, expanding, expanding until it trades back here into these old levels from the past. So imagine this being the 10 a.m. candle, and if I got this targeted low down here, which is pretty much the lower end of the range for Thursday, because that was our data low, that means that the 10 a.m. candle all the way till we get to 11 o'clock is just expanding and going down lower. So that means this low right here in this red shaded level is the 10 a.m. candle exposing itself into trading to that level, and it raids it, and it continues expanding downwards and downwards and downwards and downwards, and then it raids these lows back here. These lows back here, and of course the data lows back here all get rated and manipulated as the 10 a.m. candle is starting to expose itself. It's telling you that it wants to draw lower, and you're trying to get in sync with that lowerness here. So it does this all the way until 11 o'clock, and then that's when a new candle comes out. So this is the entirety of that 10 o'clock range going down. This dark shaded area, you want to see price continue to expand lower. So if the 10 a.m. is going to expand lower, where are we more likely to go to? Very simple concept. So it does that. Now I can start to bring these levels all the way here, a little bit closer so you can see everything. The draw. This is that 10 a.m. candle range. And for that, I will make yellow. As a matter of fact, let's just try blue. And the entirety of this blue shaded zone leads to the breakdown of the 10 a.m. candles range, and this also should help you understand how you can catch it. So since I'm done on chart 2.0, I'm gonna open the layout and just go back to clean charts and go over the entry model. So this is what it looked like on the M1. So we had that failure to get above
That short-term high, which is actually relatively equal highs on here. Price is bearish below the 10 a.m. open, and it started to break down. How do you know? Price traded underneath this old level of support here, or this old higher low, and then showed us an expansion in the opposite direction, which is in this red shaded area. So this was that first indication that the structure was shifting. We went from higher highs into higher lows into a higher high, lower low, lower high. That shift in structure here in this 3-candle sequence. So high, lower low, higher low. Very simple. Price breaks underneath this low here, we're bearish. Retests it, sends lower, trades it to this low. That's your exit or potential fill on the trade. And just simply having that approach, a 50-point stop, and just targeting that low. Simple 1 to 2, 123 points. And that's not even where, you understand that the 10 o'clock PO3 is more than likely to go. So just having that simple entry there could have still maximized you off of targeting Thursday's low for about 305 points in 3 ticks. If you were pretty much using like 1 to 2 micros, which is a very simple, it's something to very easily risk because I'm not doing any like type of insane numbers. But for instance, if this was NQ and you were trading NQ, you risking 50 points on NQ would pretty much just be, $1,000 because NQ reads as $20 per point. So you capitalizing on 50 points will lead to you making $1,000. Now you targeting 305 points on the opposite end of that, you just have to do simple math. So if you were to take a calculator, if you don't know how to calculate these things, you would just enter in on a calculator and you would look at your target positioning target for the shorts, and you would just type in 305.75 and you would times that by 20. And that would give you $6,115. And with a 50-point stop, you would pretty much be risking $1,000 to make $6,000, which lead to you having a 1 to 6 RR. But from the entry that I got in, this was a 1 to 10 RR. So you're pretty much quadrupling your money by 5 times the amount. So that's just off of a simple break and retest. That wasn't even the entry model that I actually took, which was pretty much underneath the closing node of this bearish candle. And when it came under here, it came back, retest, and fell. Failed to get inside of this fair value gap. That's cool though. It did get into this mitigation block. For those of you that are very familiar with ICT concepts and you know about mitigation, the importance of it, why price mitigates in these swings. Sorry, just removing all the doodles and scratches off of the chart. Trying to make it clean for you guys so I don't lose you. So it comes into that mitigation block. Price comes, plays in it, retests. So these are the things that I'm just seeing in the back of my head as I'm trading. I just want to see price stay below. So it does. I sell here. Price drops. It stops me out. And this retracement back up, and then I get back in again when it got here. When it got here, I executed my short again, and I placed my stop at this high. So I'm risking 41 points. Risking 41 points after the stop out of my first entry, and I held it all the way through with a trailing stop until it got to about like here, and it came all the way back up, stopping me out for about 115 points, I believe. I caught 115 points on my live account with 4 micros off of this move. So if I was to calculate that, 4 micros on micro NQ, keep in mind that micro NQ, every single mini micro contract micro NQ is worth $2 per point. So if I have 4 contracts, 2, 4, 6, 8, that means I'm risking $8 per point with a 41.25 stop. So $8 per point. Stop loss is 41.25. Risking $330. And then I targeted over about 100 points, or pulled out over about 100 points, even though it wasn't where I was looking for the target to truly go. But I took out 115 points out of that move going lower, just trailing very tightly as it was pouring. And $8 per point, that means I pretty much net profited $920, which is pretty much the correct amount of money that I made on the trade. So only caught 115 out of that, but until my target of where it actually traveled into was about 301 points and 3 ticks. So 301 points, right? Just doing the math for you guys. 301 points, 3 ticks, times $8 per point. So I could have made, if it got to my TP, I could have made $2,414 while risking $330 with 4 micros, 1 to 7 RR, very clean trade, no drawdown literally, and just complete porridge. And the duration on this trade, as in how long my trades typically last once I get in sync with the bias, you can see that this trade pretty much panned out if I just take it from entry, which is the open of this bullish candle, all the way down. Took about 3 hours and 40 minutes for it to trade about 799.2 ticks in 3 hours and 40 minutes. So this was a 3 hour and 40 minute trade idea. For it to just trade through this level, it didn't take 3 hours and 40 minutes. Just for it to get to that level precisely, it took roughly about 23 minutes. So yes, you decided this trade for 23 minutes and made 2.4K. Anything else after that was just leaving a partial, letting a runner run, and letting the candle do the rest of its thing. So that was pretty much where I got in at for Thursday's delivery, and then how that handle pretty much continued to play out. Now, just studying the fractalness of candles, you could study the next 11 o'clock candle range where we made the high and low after 11 o'clock, and then what did the market do in between that said high and low that was identified. It's so simple. So price came here, and I'll do it, just for this day. But price came here, consolidated, broke out of that consolidation, went lower. Every time we made any form of a consolidation going lower, we broke out going lower. So same thing here, price consolidating. What do? Trades out of that consolidation, goes lower, breaks the low, and it just keep doing this rippling effect over and over of consolidating and breaking the low. So price sits here in this range. Really though, this high, this low, that is the true identification of the range that price is gyrating back and forth in. And then if you were to add your fib levels or things of that sort, I'm just extend it to the right just a little bit. See how price trades right off of that 79%. And if you had your projection levels and things of that sort on the fib, which I don't here, it's kind of hard to click on it through this goddamn there we go. Let me erase that. Add the projection levels onto it. -27, -62. Short position taken within the golden zone of the fib, and your projection levels are here. Stop loss at this high, about 55 points of risk, 1 to 6. Very easy trade idea, returning back into the range. Price seeking a higher draw, just very shortly. Sweeping this high here. return into this fair value gap. Fails to break the range. So not drawing a trend line, but just want you to understand how price is pretty much failing to get above the previous highs of the swing, which would pretty much be like these higher time frame highs on like the 15-minute, 30-minute, things of that sort. See how this is those 15-minute highs here. It's a 30-minute high embedded into the 15-minute chart, but it's showing the 30-minute structure. But this high here is legitly a 30-minute high. So price is failing to go higher. It's going lower. It sweeps, returning right back into this last up close candles range. I only just want the 50% of it. Trades at 50% of that candle, rejects out of it, closes back below. We have the sweep. And where do you target? Of course, the low. And that is how you get your target on your PD arrays. 202 points. The entry model is up here, risking about 50 points, but you only received about 4 points of drawdown, about a 1 to 42 risk to reward. Smashes right through that target at 11:20, so that was pretty much the low at 11 o'clock. Delineator for the 11 o'clock fractal, that's what I titled it. And this was that beta low for 11 o'clock. And that data low for the 11 o'clock fractal was 29, 610, and 3 ticks. And we smashed that target. And that took about roughly 24 minutes. So every trade duration throughout the day took 20 minutes. 20 minutes here, 20 minutes here. And this is just nothing but price just continuing to, expand. Same concept. We trade higher, create a low, price breaks, retests, expands lower, creates a low, trades higher, price retraces, expands below, create a low, expands higher, consolidates. Price returns into that fair value gap, just clearing it up, expand lower, take the low. So it just keeps doing this over and over again until it pretty much done had its fair share of what it wants to do for the day. As you get later and later into the day, the price action starts to get more and more tired until it just dies out, and then it's just doing nothing. It's just sitting here and just gyrating back and forth between these real small ranges that you might think is big, but it's really not. So this is currently the range that price is currently sitting within currently, but really it just comes from a bigger range that we're trading within, if that makes sense. So that is pretty much how I interpret and think about my daily ranges. When price fails to return back into a previous range high, that means that we're just stuck in between two entirely different ranges that create a bigger range on a bigger time frame. But this is how I'm pretty much analyzing those ranges. So this is where price is currently sitting. If we were to come and trade below this level here, then of course you could probably see one or two things happen. Price will remain bearish below this level and seek other levels of liquidity, such as this low here from Monday, which was pretty much the low of the week. So if price does get underneath here and target this 29,273 level, that would be nice to see. Or price could get underneath this level here, fail to trade into that low of the week, which I highly doubt it at this point, for about like 54 points. But it could possibly do the same old thing it always does, clear a PD array, the low of the day, and then travel on up and take these highs. A lot of times you will see reversals. Lows of the day are very reversal reversal bound or prone when we get into these areas. So we either trade lower and take out that low of the week, maybe continue expanding going into Asia, since the PA is just massively bearish. If I was to take away all the lipstick and you would just look at the chart, you could clearly see that price definitely looks like it's setting itself up to retrace, correct, and expand, going lower, trading into the low of the week. And if we look at it from the 4-hour, that looks like a complete flippage of the 4-hour stick, and the 4-hour stick looks as if it too wants to go to the low of the week. And if you were to look at it from the daily, everything screams bearishness. It's very simple. It's not hard. Stop overcomplicating trading. But that is all I have for you guys here today. So this video pretty much just went over the multiple ranges throughout the days from June 28th up until July 2nd, which is today's current Thursday. And I hope you guys enjoyed the video.